And well, we got the June CPI reading. The June CPI reading came in hotter than expected, hotter than I expected, and has a 9 handle on it, as Greg Dickerson called on Monday. So let's talk about what this all means. So again, right? 9.1% inflation. It is headline inflation. Core inflation, I believe, was 5.9%. You and I care about headlines. That's where rent, food, gas, clothing, everything we get kind of lives in there. What I want to talk about, though, is what happens now? What happens next? Because facts are interesting, but you and I as investors are kind of looking into the future. So I've been thinking about this for about an hour this morning. This is kind of how I break down what a 9.1% CPI headline inflation means. First and foremost, Wall Street analysts, Kathy Woods of the world, Taylor, my Monday expert. If you watch the interview with Taylor, I gave him several chances to change his call. Wall Street wanted a lower number. Wall Street wants to say peak inflation. Wall Street wants to say it. They said it a month ago. They said it 2 months ago. It is wishful thinking. As I said 2 or 3 weeks ago, I believe peak inflation occurs this summer. So we got the first reading. We have 2 more to come. Who knows? I have no idea. Will 9.1 be the high water mark? I certainly hope so. I have no confidence in that. When you look at the 9.1, it is very broad-based. Next thing you are going to hear, and the President of the United States will, if he hasn't already, will say the following. Get ready for the President of the United States and Wall Street talking heads to point at the gas pump. Gasoline is down 20, 25 cents, maybe trending lower. When you look inside the CPI and the 9.1, yes, energy is a big, big part of it, but it is by any means not the only part. So part of having these discussions are knowing what people are going to tell you over the next week, over the next 10 days. They're going to say peak inflation is finally here. They're going to say, good news, 9.1, it's the peak. Look, gasoline, lumber, copper. Who knows? We have so many things going on right now. This is part of the process. Another thing you're going to hear Kathy Wood and others talk about is the bullwhip effect, right? Where you make a little change and it kind of works its way through. We are seeing some of this at Target and Walmart and other retailers. But this bullwhip effect that people really are hoping for is going to be a moment in time. In fact, I told you about this moment in time 6 months ago when all of us collectively should have moved Christmas to July. What is happening is people were double and tripling order. Now the orders are showing up. So guess what? They stopped ordering or greatly cut back. This bullwhip effect will impact numbers in a very, very small number. In fact, clothing, the anchor of Kathy Wood's argument a month ago, clothing is going to go negative. Nope. Clothing went up 2%. So again, get ready for these conversations. And one more. You are going to hear more and more and more about deflation. I'm actually not sure if that's off the screen. It's off the screen a little bit. That last word is deflation. So folks, this is what the media is going to tell you. I want you to know it's coming. I want you to listen, but not be swayed. Okay, and I'm looking at my notes because I really did think about this. Okay, so what color do I want now? Let's try green. So questions that I have. These are what the media is going to talk to you about. This is what I want you to internalize. The Fed. Can you read that? Yeah, not very well. Let's try. Oh, I don't know. Let's try black. Okay, the Fed. The Fed has come out and clearly said we got to be tighter. What the hell do you think they're saying today? So we have a July meeting and a September meeting. Remember, 2 weeks ago, Wall Street was telling us 50 basis points was the move. They're wrong. Now what they're looking at is 75 and 100. You know how I feel about this. I want Jerome Powell to be aggressive. I want them to kick Wall Street in the nuts. I want them to do 100. Shoot, Jerome Powell, if you're watching, do 100 today. He's not watching. I believe he's going to do 75, and then what they will do is they will put 75 on the table for September. 3 75-point rate hikes are coming. We've already got one. We are undoubtedly getting one next week, and I believe we will get one for September. So the Fed, as we've talked about for months, they are late. They are late. They are very, very late. So what else is going to happen? Mortgage rates. Right? Mortgage rates are going up. They're just going to. They may go up slightly this week, slightly next week, but when they start to internalize September, mortgage rates are going up. Here's another thing that many, and I'll even say most people are not telling you. Liquidity. Liquidity is drying up. This is the Fed sucking liquidity out of the system. You are going to see more and more mortgage originators go poof, non-QM, traditional. All of this is happening. Cash out refis down 80%. Purchases down. This is all leading to what I'm telling you is coming, a second half recession caused by real estate. This is what I believe. And then finally, earnings recession. You know by now, I've been beating on Wall Street for doing a shitty job or a terrible job. I believe we've started to see earnings. Did you guys see ServiceNow CEO yesterday? ServiceNow, if you don't know who they are one of the largest enterprise software companies, cloud-based enterprise software companies. They are gargantuan. Doug McDermott, their CEO, came out and said, no tech companies can avoid the strong dollar. What did I tell you a month ago? Shoot, what did I tell you yesterday and the day before? You are going to see CEOs claim FX charges, strong dollar. Folks, their sales are crumbling. They want to blame something else. They are going to blame the strong dollar. Now, let's be clear. The strong dollar is hurting, but it's hurting after a weak sales. Remember, I'm a sales guy through and through. I had quota for Europe, Asia, all of these places. And what happens? Europe is got to be almost dead for buying software. Asia, not far behind. So in my world, my quota for Europe was probably 25 to 28%. Asia was like 22, 23%. So that's about half. Europe, if your sales are down 70%, and then you get hit with a 20% currency, that is a disaster. That is what I believe Doug McDermott is looking at his sales forecast, going, holy cow, we are going to disappoint. And let me be very, 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 very clear. Doug McDermott of ServiceNow is a genius. Get out in front of this. Own the story. Tell the story. You have a chance. There are going to be dozens of tech companies, software companies, who get crushed because the rest of the world is in a recession, as we have talked about on this channel. This is not going to be good. The bottom is not in for the stock market, but it's okay. We have a plan, right? So, let's see. Can you read this? Yeah. Let's stay with black. No, we got to do a different color. I'm sorry. Let's try this color. Here's the question I have. Can you read that? Close enough. That says, do we need a recession? Do we need a recession? Do we need a recession to break inflation? And I don't have any good news for you. The answer as of this morning, the answer yesterday was, yeah, probably. The answer this morning, hell yeah. Folks, there is only one way this breaks, and that is with not a shallow recession. We are going to have a multi-quarter Q3, Q4, Q1, Q2, Q3, Q4, 6-quarter recession. It has to happen. It just does. I don't know how the hell you get out of this without a recession. And again, I believe real estate, and specifically real estate transactions, are going to cause the upcoming recession. Okay. So, a couple of things about this, because that sounds scary. I do not mean to scare you. Not at all. What I want you to realize is we have been talking about this on this channel, these daily financial news shows, for 6 months. My hope is most of you took my words of caution and got prepared. If this is your first time watching, this is what I recommend everyone to do. First, 9.1% scary headlines. First thing, take a breath. Take a breath. Take a heartbeat. This is all part of the process. The economy is a complex beast with lots of components. No need to do anything drastic. Take a breath. Number 2, I want to steal a comment from Brian Lebo, a broker in Las Vegas. He introduced a concept called MOL. If you want, go ahead and look on the channel for MOL. It stands for months of life. Months of life is something Brian has done when he looked at his business, both in the 2008 Great Recession and recently. How many months can you live on your current savings if your income went to zero? That's a tough question. This is the time, realize the economy is going to break. So you should do your job. What is your job? Take care of yourself. So do yourself a favor, take a breath, go look at your savings, your trading account, figure out, hey, honey, if I or you or we or whatever lost our jobs, how many months could we survive? Months of life, go do that inventory. Now, if you're a real estate investor, and you probably are or want to be if you are on my channel, nothing changes. Have a buy box. There's a 60-minute deep dive on it. Go watch that. Must. A buy box is daily discipline and permission to look at nothing else. 2, we are only doing great deals. I am actually pushing all of you to clearly define what a great deal. I want to add these. The market is coming to buyers and investors. Our job is to use the market for maximum advantage. 1, we are not paying list price. 2, we are only doing great deals, which mean yields above average. 3, we are asking for closing cost credit. Even if it's 50% closing cost credit, that helps your yield. 4, we are asking the seller to buy down our rate. Lower monthly payment, better yield, all good for you. And then 5, we are making sure if we are lucky enough to be in a position to buy more than one, we are going to make sure deal 2 was better than deal 1. Do not rush. I don't care if you're buying crypto, NFTs, stocks, small businesses, real estate. You have time. Time is your friend. Just breathe. Just breathe. So finally, what do I think about? If you watch my channel and you know I have an economics degree and all economists focus on one area, I study the consumer. So when I sit and stare at this 9-1, I realize what the media is going to tell us, what the president of the United States is going to tell us. I realize what the Fed is going to do to us. I realize that I now believe a recession is required. What is the consumer going to do? Well, for me, at this point, after a 9-1, the consumer has two emotions, my opinion. Two emotions. One is anger. I believe the consumers are going to get angry. Angry. What does an angry population, an angry consumer do? Yeah, you think the November elections were going to be a bloodbath before? I hope that 50% or more of incumbents lose. I don't give a rat's ass if you're a Democrat, a Republican, an independent. If you're in position today, you need to be fired on principle. We need new blood. You did not do your job. And yes, you want to blame somebody else? I don't care. Your ass was in the seat when this stuff went down. You need to go bye-bye. Bring somebody else in. An angry population. The November elections are 90 days away. 90. I hope you guys remember this. I hope you vote. I would love to see just a clean washout. Senate, House, everybody who's up, gone. Bye. Retire, do whatever you want, go do something else, make money on K Street, whatever it is. But then second, so that's anger. Second, fear. Fear is powerful. Fear, frankly, is something I don't wish on anyone. Fear is dangerous. When you are afraid, you make rash decisions. When a consumer is fearful, they are without question going to retreat from the market. They are going to get smaller. Businesses are going to get smaller. Fear in the consumer world will without question lead to a recession. So folks, 9-1. 9-1. Highest since I think July of 1982. I have no idea if this is peak inflation. You can bet dude, I can hear the Wall Street analysts already. Yay! 9-1! We did it! It's peak inflation party! No. You can't say that. Rent this week or today, as we all know, I've been beating on rent. I haven't done the math yet, but I've done it enough. I'll get close. So rent in this month's calculation was the highest in over 20 years. It came in at 6%. You and I both know rent is far more than that. It's over 15%. Let's assume it's 15%. So real quick. So 6, 15, that's 9. It's 30%. That's an extra 3. 12.1%. If you correct for rent, this is about 12%. Rent is a lagging indicator. So yes, President Biden will tell you gas is coming down. What he won't tell you is rent is going up. I don't know when peak inflation is. I called it. I'm going to stick with it sometime in the next 3 months. Well, we got month 1. Let's see what the next 2 months mean. And again, when I say peak inflation, that does not mean smooth sailing ahead. That does not mean that. It just means, damn it, we got the high water mark of this period. It doesn't mean good things. So folks, again, this is part of a bottoming process. It's not fun. It's not enjoyable. Take a breath. Understand your months of life. Take care of your little world. Understand if you're feeling fearful or angry. If you're angry, please take it out on the politicians. We need some new blood, just on principle. I don't think the next ones will be any better, but let's at least kick out the old ones. And then again, if you're afraid, it's okay. I've been through some deep, dark recessions. I have lost 80% of everything. I get it. It's scary. As Greg Dickerson, my Monday expert in Millionaire, says, good times never last. Bad times never last. Unfortunately, we are just at the beginning of this. But we'll be okay. We will get through this. We will get through this together. So, folks, I don't have any good news. It was bad. These people are going to try to make you feel like it's not so bad. We got the Fed going to be uber aggressive. We got a nasty recession starting probably in Q3. It's going to be real estate led. I don't know what to tell you. So again, I wanted to bring you this first. We will do the daily financial news at 7:30. I actually have no idea what time it is. I might be late already. So we'll close this out. Take care of yourself. Like, subscribe, comment. Let's just keep moving forward together. Bye.